Good afternoon, everyone. This is Cassie Hopebridge, Director of Economic Development and Planning for Downtown Houston Plus. I'm joined today by our research lead, Brendan Harrison, and we're going to talk through some of the data in our latest quarterly market report, the Q1 2024 report. As always, we are recording this webinar so that if any colleagues of yours could not make it today and would like to view this webinar, it will be available on our website tomorrow. So with that, let's go ahead and kick it off. So for Q1, we thought long and hard about what was the theme of this quarter, what was the big takeaway. When we looked at the health of our submarket, from office to hotels, to our daily activity and the performance of our outsized destinations. And what resonated with our team was this sentiment of on solid ground. We're really leaning into our new post-pandemic normal. And what we saw, both in terms of quantitative data and also feedback from our stakeholders, was that Q1 was a very stable quarter. We saw a lot of settling, if you will, of activity, especially around leasing and absorption of our residential units, office sector actions, as well as visitor behavior and seeing steady trends of people coming to downtown. So what we're going to do right now is talk through our top 5 takeaways from the quarter and explain a bit about how we arrived at these takeaways from a data perspective. Brendan, take it away.
Okay, so starting off, we had spring arrived in downtown Houston during Q1. As Discovery Green's ice rink transformed into a roller rink, over 5,000 tulips popped up along sidewalks and parks downtown. Additionally, over 270 events took place in downtown parks, courtesy of Discovery Green and Downtown Houston Plus spring programming series. Downtown Houston started off 2024 with a bit of a slow buzz, averaging about 86,000 visits a day in January. But as the weather warmed up, so did activity, with the daily average reaching 109,000 visits by March, a 27% increase. The most outstanding weekend for downtown was at the end of March with the Astros season opening series against the Yankees. Over the course of the weekend, the series drew in a whopping 500,000 visitors, injecting a huge dose of energy into downtown. But we cannot give up on the Astros. We know how important the Astros can be to downtown visitation, especially during April to hopefully March. Last season, the Astros drew over 3 million fans to Minute Maid, which was an average capacity of about 92% per game. Opening weekend averaged 99% capacity over the 4-game series, but since then, the next 2 weekend series have averaged just 89% capacity. And this amounts to over 4,000 fans a game, which is a significant amount of activity not being found in downtown Houston.
So our second takeaway from the first quarter of 2024 was the role of our big events and conferences in bringing big crowds to downtown. Brendan touched on it with the opening weekend of the Astros. What we want to do is really lift up these special outsized events and also make note of our strong connection between downtown and NRG Park. For instance, the NCAA College Football Championship, which was at NRG Park, had an enormous impact on downtown's economy. In fact, that was the weekend where we saw the highest occupancy rate and revenue per room for our hotels. And just a reminder, almost half of all hotels within Loop 610 are located in downtown. So to see this level of occupancy during Q1 is outstanding for an event that was located in NRG. Other outstanding weekends for hotel performance include a conference event, the National Corn Growers Association Conference. And during that weekend, we saw 95% hotel occupancy as well. We also wanted to lift up the impact of CERAWeek, or the internationally attended energy conference. And that conference had quite the impact on hotels as well, with around 81% occupancy. One specific event that we have another I would say special access into its performance due because our organization put it on was Lunar New Year at Market Square Park. Of course, Lunar New Year was celebrated around all of downtown throughout the month of February. But the event at Market Square Park was an opportunity for us to dig into what is the type of activity that folks are engaging in when they come to our parks for special events. We were especially curious to learn if they chose to spend money at food and beverage establishments around downtown before or after coming to our park. What we found after surveying more than 10% of all attendees that came out for Lunar New Year at Market Square Park was that the average group size was around 3.37 people. And of those groups, on average, they spent $94 at the park itself and at food and beverage establishments in the immediate area. We estimate that this event attracted around 5,200 folks, and we estimate that it's likely more, as this number is only looking at anonymized cellular data, and we are certain that a number of children were also at the event and may not have been captured by that figure. One other thing that we'd like to lift up is how downtown events impact F&B establishments, especially when there is a partnership. And so our organization actually collaborated with Bravery Chef Hall for the Lunar New Year event. We distributed promotional materials for a discount at Bravery Chef Hall the same evening of our Lunar New Year event. And what Bravery Chef Hall reported to us was that they saw a remarkable 75% increase in sales compared to their typical Saturday. We wanted to highlight this because we believe that there is enormous potential with the events at our parks, from Market Square Park to Discovery Green, and their coordination with local businesses. These serve to be an opportunity to get folks out and about downtown and discovering new retail nodes.
Okay, so now we're going to shift over to the office sector a little bit. So 2023 as a whole saw pretty significant growth in the return to office rate compared to 2022. Compared to 2019, 2022 saw about a 54% worker recovery rate, while 23% saw a worker recovery rate of 67%. Q1 2024 saw worker recovery increase 3.1% year over year, recovering 68% of its worker volume compared to 2019. This sentiment has been noticed by market participants, including Brookfield. Travis Overall, EVP, states that since mid-February, we have seen a noticeable uptick in office occupancies across our portfolio. He adds that tenants are utilizing building amenities at high levels, as well as seeing strong demand for move-in ready suites. Much of this can be attributed to the hybrid work environment, as employees have found a new normal in their work schedules, enjoying the comfort and conveniences of working from home. Building owners and managers realize the need for meaningful amenities to bring employees back into the office. These amenities can include fitness centers, conference centers, flexible workspaces, dining options, and other amenities. Fridays, the least popular in-office day, only saw about 65% of the worker activity as seen on Wednesdays in Q1, while Mondays saw around 73% of the workers' activity as seen on Wednesdays. So whether we like it or not, hybrid work is here to stay in some capacity, so growth and future worker activity downtown will have to rely a little more heavily on growth and expansion of business downtown. So we saw that in Q1, new leases were around 1,500 square feet larger than renewals on average. And while the renewal data is a smaller sample size, we have seen that few companies are increasing space with renewals, and some are even reducing their footprint. So the key to growth downtown will not only require keeping existing businesses here, but also attracting new companies to plant their flag here. So according to the 1979 Central Houston CBD office story, almost 2/3 of our office space was occupied by energy industry tenants, which was at the time oil and gas companies. 82% of office space was occupied by just 3 industries, and today only 13% of downtown office space is occupied by mining, quarrying, and oil and gas extraction. The other sectors in downtown occupying office space at a rate between 1 to 13%, except for professional, scientific, and technical service, which occupy 31% of the overall space downtown. So having a diverse mix of tenants and industries downtown really protects us from market swings, such as when we saw the energy commodity price crunch in the mid-2010s. And while the Houston market still does have a very large energy presence, we've definitely come a long way from where we were a few decades ago.
So to complement a point that Brendan just brought up, which is, of course, downtown Houston and Houston at large still has quite the dominant energy presence. There was an interesting takeaway from CERAWeek in Q1, as well as some activity in downtown that we wanted to lift up in this quarterly report. After engaging with a number of CEOs and looking to the latest in leasing around downtown, without a doubt, downtown Houston is becoming the top destination for energy transition companies. In fact, this point was reinforced at a panel during CERAWeek by Bill Gates himself, who referred to Houston as the Silicon Valley of energy, specifically energy breakthroughs. This observation has been reinforced by some preliminary data that has been assembled by Greater Houston Partnership. Greater Houston Partnership estimates that there are over 500 energy transition companies or companies leading energy transition initiatives across the Houston region, and around 20% of those companies are headquartered downtown. In conversations that our organization has had with prospective companies that are considering a relocation to Houston to lead their energy transition work, what we're finding is that downtown Houston is the top choice for these companies because of the low carbon footprint their office space can have and the multimodal options that their employees will have access to.
Okay, so lastly, I know that in the past we have hammered down those points of a growing inventory and our absorption downtown, and we're gonna continue to hit on those points in this quarter. So with Elevate and Warehouse District Phase 1 complete, there's been 645 units come online over the last year, which represents about 8% of our current inventory. There are an additional 444 units in the pipeline, 215 of which are scheduled to be delivered by the end of this year. These 444 units represent another 5.5% of our current inventory. So regardless of this, we still see downtown residential offerings stay active with leasing activity. Vacancy increased by 0.5% in Q1 2024 compared to Q4 of 23. However, Warehouse District Phase 1 delivered 273 units in Q1, which were 50% vacant. So these additional vacant units account for 1.7% of the total inventory downtown. And additionally, while downtown increases inventory by 8% over the last year, vacancy has managed to decrease by 0.5% in the same period.
Heading on to the points that Brendan brought up, we ran an analysis for the Q1 report. We wanted to see where this quickly growing downtown residential population falls in terms of demographics. What this chart is depicting is the median AMI for downtown and surrounding neighborhoods, as well as the median age for downtown residents. And what we can see is that downtown actually falls somewhat in the middle of its shoulder community's demographics, which tees us up very well for not only absorbing more market rate units, but also different types of affordable units. Especially looking at neighborhoods to the east where gentrification is rapidly displacing long-standing Second Ward, Fifth Ward, and Third Ward residents, there's a real opportunity for downtown to create more affordable housing, something that specifically our Downtown Redevelopment Authority Board is deeply invested and interested in pursuing. An example of a successful affordable housing project is 100% seen and witnessed in the success of the Warehouse District apartments. These units are targeting workforce housing opportunities, meaning 80% of Houston's AMI would qualify for half of the units in these new residential offerings. We look forward to advancing more affordable housing options across downtown, ranging from affordable to the workforce and to lower AMI levels, especially given our multimodal network and close proximity to the medical center, which has about 10% of Houston's workforce, and the average income for a healthcare worker aligns almost perfectly with workforce housing. We appreciate you all being here today, and what we'd like to do, as always, is turn it over to the chat. Should anybody have follow-up questions or questions about the report in general that we can answer or respond to. We also welcome feedback for future reports as well. Give you all one more moment in case you have any questions, and if not, we'll wrap up and go ahead and post the webinar online. Great question. How do you calculate groups of 3.37 people? Brendan, do you want to take this one?
So yeah, so part of the survey we said we sent out to participants was, so they would scan a QR code and they would answer, one of the questions was, how many people are in your group today? So we would take anywhere from groups that had one person per group to groups that had 10 people per group, and then we just averaged those numbers out.
And this is specifically about the Lunar New Year event at Market Square Park in February. How does a business owner get involved to collaborate with our efforts? It's a great question. You're welcome to reach out directly to me. My email is available in our quarterly report at the very back, but also on our under our Do Business tab on our website. You can click on our initiatives or incentives and programs tab, excuse me, and there's a small business and retail program page that you can click on, and one, you can view all the ways that we engage with business owners, and two, you can reach out to me directly through that web page. But to give a bit of a summary of the ways in which we support businesses of all types, we support folks in identifying locations for office or opening up a shop. We support with marketing and outreach efforts, especially if you have public events that you want to share with the greater downtown community. And we also are always here to provide you with data that can help you make smart business decisions. Great question. So I'm going to read it out loud. Thank you for the presentation. Can you speak to how upcoming investments like More Space Main Street 2.0 will affect the trends downtown Houston Plus is seeing? So projects, let's talk about capital improvement projects, right? So More Space Main Street 2.0, for those that aren't aware, is going to be an effort to extend the impact of More Space Main Street, a project that launched in 2020 in response to the pandemic and the need for there to be more outdoor dining options and public spaces along the Main Street corridor between Allen's Landing and Rusk Streets. That program was so successful that City Council moved to make it permanent so long as our organization could lead the planning, design, and construction and long-term management and maintenance of the Main Street Promenade project area, which is what we're calling it now. Given that this project is going to create a one-of-a-kind pedestrian thoroughfare between Allen's Landing and Main Street Square, we believe that we will see an uptick in not only spending along the Main Street corridor at these local businesses, but also a boom in tenancy for vacancy along the Main Street corridor and in the perpendicular retail corridors, such as the Historic District and the Theater District. We feel confident in this change for several reasons. One is that we intend to launch a corresponding supportive retail or storefront grant opportunity in the form of a grant program. This is something that our organization has a history of doing for downtown businesses for over a decade. And we're really looking forward to folding this into a larger economic development initiative with those grants. The other belief that we have about this project is that our organization's ability to bring an enhanced level of maintenance and management to the promenade will create special moments of joy, really, for those that are visiting downtown, that work in downtown, and that live in downtown, that just simply aren't there today. And so when I talk about maintenance and management, what that means is ramped up clean and safe services. We're using the number 3 times as much clean and safe services for the promenade area. We also will direct our programming resources towards the future promenade. So all to say, we really view economic development as an initiative, as work that we must do. That includes research and reports like this, but also public realm improvements that truly benefit the adjacent small businesses and properties and create spaces where people want to go out and spend their time, spend their dollars in downtown Houston. So in addition to More Space Main Street, we also intend to, like I mentioned, stand up a new iteration of the Downtown Living Initiative so that we're bringing in and inspiring more investment in housing in downtown, really looking at affordable housing opportunities, especially workforce, given the sheer volume of jobs that are located in downtown. And we also are looking at making other sort of public realm improvements to enhance connectivity around downtown. In these market reports, we talk about the millions of people that spend time at our stadiums and come down here for sporting events or music events or to enjoy our parks. And we want to make sure that those people feel safe, comfortable, and inspired to move around downtown and explore the different F&B options that downtown presents, our unique green spaces, our historic architecture, and our performance spaces. So we believe public realm improvements will directly impact economic development downtown.
Something in the chat.
All right, well, thank you everybody for your thoughtful questions. And as I mentioned at the beginning, my name is Cassie Hopebridge, Director of Planning and Economic Development. Brendan Harrison was with me today, our research lead on our team. And Jackie, I believe, put in the chat my contact information. We always have an open door and we welcome feedback, questions, ideas at any time, ways we could support you and your business. And please do let your colleagues, peers, friends know that this webinar will be online tomorrow. Should anybody want to hear firsthand how we arrived at some of the big takeaways featured in our Q1 2024 market report. Thank you all, and we hope you have a nice rest of your week, and we'll be back in 3 months for the next Behind the Data for Q2 2024.